Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, for the markets, it's pretty much consolidating right now for the Bank Nifty, the Nifty and the Sensex, and the mid-cap index currently outperforming. So it's pretty much status quo in terms of the indices and how they're moving on a larger scale. The advanced decline ratio, even keel at around 1:1. Let's get talking about a couple of big movers then. The other one which is on our radar today is Aarti Drugs. That particular company gets around 82% of its sales from the API space and 9% in terms of formulations. It came out with its numbers. It was around a 9% growth in terms of revenue. As you can see, the stock is shot up around 15-odd%. Margins also were at around 14-odd%, flattish on a year-on-year basis. But there's been a recovery which has taken place this quarter for the company, especially in the API business. So let's start with that. We do have the management joining in to discuss the numbers. Adhish Patil is here with us. Adhish, hi, welcome to the show. Well, let's start with, the revenue part of it, because you did mention that API prices were a bit subdued. How did this quarter pan out for you in terms of API prices and the overall revenue growth that you've clocked of around 9%?
Yeah. So the API prices have stabilized since December quarter, which is a good news. And that was the main reason why our second half of this FY25 showed a good improvement in gross contribution margins. And now that it has stabilized, we feel that now we have to work more on the expense side of the manufacturing part to improve our EBITDA further. So in this quarter, we already clocked an EBITDA margin of around 14%, whereas on the standalone basis, it was around 14.5%. So going forward, if formulation business improves more on the margin front, then the margins of 14 to 15% is not far off for us on a consolidated basis.
All right, margin to 14 to 15%, not too far on a consolidated basis. What is your revenue prognosis for FY26? How much comes in from exports? What's your domestic sales guidance? And, in the revenue, what would be the volume? How do you expect prices to move?
So the prices have stabilized now. So we don't foresee any change in pricing scenario as of now.
Got it.
But when it comes to projecting FY26 versus FY25, the first half, we might observe a negative price variance of roughly around 4%. But that was because in the last year, we saw some price decline quarter on quarter. On that account, we are forecasting around minus 4% for the first half. The second half won't see any price decline year-on-year basis for FY26. And whatever growth we are forecasting for FY26 purely on the volume terms, hopefully the current demand continues like this in the coming 4 quarters, and with the addition of 2 more products, salicylic acid and a couple of methylamines, we feel that volume growth should be pretty easy for FY26.
How much? How much volume growth, Adhish?
So around 10 to 15% is what pessimistically we are targeting.
Pessimistically?
Pessimistically, wow.
So that's your base case scenario, you're saying?
Yeah, yes.
So what's your optimistic scenario?
So the thing is, salicylic acid has a full potential of around 250 crores per annum. Methylamines, even though it is 200 crores, but 50% of it will be captively consumed by us for our anti-diabetic product, metformin, which is quite big for us, around 12% as far as revenues are concerned. So it will be both these projects will be helpful on 2 fronts. One is backward integration, improving the gross contribution, and other is on the sales side. However, I would like to point out that as far as salicylic acid is concerned, so we have been taking big losses for each quarter in FY25, almost to the tune of around 6 crores at a PBT level. So once we reach around 700 tons to 800 tons per month capacity utilization, we'll be breaking even. So that will be additional jump in terms of profit margins for us.
Okay, all right. Well, Adhish, while we've spoken about the numbers, I just want to touch upon your Tarapur plant. You did receive a voluntary action indicated status for it. Correct me if I'm wrong, did it have prior issues when it came to the US FDA?
Yeah. So that Tarapur plant was under import alert from quite a long time, actually. So we were quite thrilled the import alert was removed from that facility, and now we are approved to ship to US from that facility. However, it will take some time to ship to US directly. But the thing is that stigma associated with the import alert with the facility was also hampering our sales in the European markets from that facility. So that will pick up pretty fast, whereas the US will take around 12 to 24 months to come in a meaningful way.
So
Typically,
right now,
what could the revenue be from this plant for both the US and Europe once it scales up?
Yeah, so whatever facility we have right now, that can give around some 85 crores of revenues, but then the profit margins would be really high, which will it's almost margins would be double or triple what we make in ROW market. Whereas we have more land parcel in the under the same FEI number, which we can put another facilities and double the revenue potential from that facility.
so the US was a small part of your business. Now you're probably going to go, full tilt on the US business. What is the plan? Do you want to become a formidable player in the US, or you want to keep it under, say, 5-10% in terms of total revenue?
See, our target would be to keep on improving on it. In fact, after receiving this US FDA approval, we are confident, and so we want to make a move for our metformin facility as well, which contributes around 12% to our revenues. So we are filing USDMF in this particular year for metformin, and we would like to get that plant also US FDA approved. We already have European approval for that plant, but US FDA would be helpful.
Okay, before we let you go, Adhish, there was that UK FTA which was signed yesterday. Any impact on the API space which would benefit you all?
Can you elaborate on that?
The UK free trade agreement was signed with India. Just wanted to understand whether any impact would come in on API supplies from India to the UK,
okay.
And which would, which companies such as yours could benefit from.
Okay. We don't see any immediate impact, because we don't see much formulation facilities in UK. It is mainly in the other parts of Europe, like Italy, Spain, and Germany.
Okay.
And other formulations are going directly from from India and China to the Europe. So from API perspective, it may not make that big of a difference for us.
And you still hold on to that 4,000 crore revenue target by FY28 guidance, right?
No, we actually slightly had to revise it down.
All right.
So what we feel that we will still try to make 3,000 crore plus in 2 years' time. And from there onwards, we will take another step to 3,500. This is purely based on the fact that the API prices have corrected tremendously over the last 18 months.
And how would your revenue mix look then? Because right now you have nearly 80% coming in from API, formulation, which is about 5 to 8%. You wanted to double it over the next few years as well. Then there's specialty and intermediates, etc. So what does your revenue mix look like at, say, 3,500 crore revenue by FY28?
So what we foresee is that the growth in API won't be that high, but intermediate nutraceuticals and spec chem, these three segments will grow more in the standalone company, and that will be similar to so formulation may not be going upwards of 15%, but the spec chem, intermediate and nutraceutical, that segment can almost double. Now it is around 8%, so it can go like 15-20% as well.
Okay. Any other plants which are under the US FDA scanner, or was it only the Tarapur API facility?
Tarapur, then Sarigam, which we will like to file. And we got US FDA approval for our oncology formulation plant in Baddi this year itself.
Okay. All right, Adhish, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Aarti Drugs. That stock is up 14.5% doing well in today's trading session. A lot of bullish comments coming in, except for the fact that they had that 4,000 crore target. They're now looking at around 3,000 to 3,500 odd crores. And that is because of the subdued API prices that they are dealing with at this point in time. So that would be one of the key reasons. But nonetheless, we need to take a break on that note, but we'll get you more on the markets. A lot of stocks buzzing around. More on the other side. Stay tuned.